Hi, welcome to lesson number 3, which is trend, supply and demand. So I'm not going to use slides on this video. We're going to use Forex Tester 2. And all I'm going to do is show you trend following supply and demand. You need to understand this because as per the trend line and the trend line breaks, when you combine these all together, you can set yourself up real targets and high probability trading setups based on a combination of applying all this information together. So supply is always going to be above, and sometimes I've called it demand, but supply is above, demand is below. Demand is when you want to buy and supply is when you want to short. So anything that's coming up on a pivot low would be a form of demand. So if we just follow the stair-stepping demand, which is trend following, there is a little bit here as well. This is trend following demand. Now, trend following demand is normally just fresh levels. And what do I mean by fresh? I mean, once the level's created, price has not been there before. So this is a fresh level. Do not get this confused with original. Original is a level that has been created without any interference from another level. And normally they are like rally, base, rallies. Or if we have a pullback like this, we go to the low and we look to the left, this is just clean candles. There is no basing area in here. So now we have a drop base rally, original and then fresh until it's touched. Okay, they're the difference between originals or fresh and original. So here is a fresh level. If I just move forward with Forex Tester 2, in fact I'm going to use a 240 minute because we get little 2-hour candles on the daily, which is confusing. So we're going to use the 240 and it makes no difference what time frame. Here we go. Supply. Trend following supply. Now we've got trend following demand. Why have we got trend following demand here? Because the supply level has been removed. So we're talking purely trend following, going with the market on this 4-hour. Not multiple time frames, just this time frame. And we always want to be only looking at, when we're using trend demand, the very first demand level or supply level that's formed. If we've created a new demand, then we want to be looking at this demand. Every time a demand level is taken out, supply level becomes in control. Now we've got to understand you've got swing highs and swing lows, or you've got rally base rallies and drop base drops. Until we've taken out, as per the previous trend videos, the trend line videos, a swing low or a trend line, then we won't be leaning on that particular supply and demand level. So once it's taken out a trend line and previous supply and demand, we start to lean on it. But purely trend following is the most recent levels that are created. And once we start going below it, we're no longer into trend following supply and demand. This is demand. And if we make a new high, right here, we have more demand. Not closed below, so I would lean on demand, lean on demand. Now we've got new demand. So this is trend following supply and demand. It's very clean and very simple. There's also a rally base rally here because we've got an inside sort of open and close of this candle. We talk more in clarity on the Discord group about this. So this is trend following demand. We're still not made a new high, so we can't adjust. And now we have trend following supply. What was demand now become supply. And now we've taken this supply level out. Have we made a new high? No, but have we taken out supply? Yes. So this is now trend following demand. Rally, base, rally. Now we've got a little bit of a rally base drop, supply. You see we've made a lower low here. And there has been some basing above, so this is supply, trend following supply. Very powerful stuff, but not always going to work for you. Not always going to be so clean as this. More trend following demand. So I think you get the picture. What is trend following supply and demand? Now, what do we really want to use this for? For me, I love using this on the high time frame. So we want to be, you can use it on low and high time frames. But if you think about on the high time frame, it's going to give me the bias and the direction where I want to be looking for. So if the higher time frame here is up, and if we come back all the way back to following the demand levels. So if we get to this point and we know that the supply is being removed and demand is in control and we've got new demand, I know I want to be looking for longs. So if I was going down to from a 4 hour to let's say a 15, I might be looking for any of my patterns, my breakouts. Remember the trend line breakout video? There's even a 15-minute trend following demand here. We've got some chart pattern and a break. And now we've changing. Doesn't mean it's going to work, but all we know is we want to be looking for longs. I've got a fresh and original level in here, which we'll talk about later. So you can see the bias was the 240, and what I'm looking for is based on the 15, the direction, anything that's going to tell me that I've got a high probability opportunity to go long. And this is just a typical example. Breakout, for example, here, 15-minute, I'll be looking for breakouts because I know I want to go long. Doesn't mean we're going to get it. There is a breakout here that potentially I would have took a trade on, did not work. It doesn't change my bias. I want to be long. We got this range bound, again, another breakout. Again, if we do this, we've got a breakout area. So you understand this is not rocket science. It's quite simple, but it's not going to mean you can just apply a high time frame and a lower time frame and keep taking every single level. You still need to do the analysis, but my bias on this 15 is only for longs. So I'm looking for any break of downtrends. Even this you could have been looking at, going for longs. There's not much else I can see really, but that was a breaker structure going for longs, double bottom. We've got some structure here now. That's moving down. Breaker structure going for longs. Break of structure chart pattern going for longs. Back into real deep 240 minute. Let's come back to the 240 minute into the trend following. This is where we're looking for high probability setup. Now watch. Look at all these candles. Look at the highs. This is a 5-minute downtrend until that happens. So I'm just going to give you a little dip into future videos. strong downtrend. There is a trend line here, strong down trend line. Let's go and have a look even on we'll use the 3 minute. Trend line break. There is a form of a flip zone here, but nothing has been removed on the 3 minute. Now this is a 1 minute. So if I know that we've had a strong move down and here's my 1 minute supply and we've removed it and removed the trend line, then this would be an area where I want to buy, and maybe I'm just going to buy when that happens with stop below here or stop below my big 4 hour level. Then we get the move. This is how powerful trend following supply and demand is. In this case, we could just use the candlesticks. Once we've gone above the candlesticks, definitely the trend line's broken. There is a change in bias, timing rules come in, and we look for longs. So that is a quick video, a detailed video on trend following supply and demand. I'll see you in the next video.